You can measure an empire by the length of its borders, the number of warships, or the gold in its vaults, but history often measures it by a ticking clock. For Rome, that clock ticked for centuries, and then everything shattered in just 3 days at Ravenna. For Britain, the clock ran slower 2 decades of slippage from the glory of sterling to relinquishing the role of hegemon. For the Soviet Union, the world watched a superpower vanish in 900 days, not because of bombs, but because of numbers. Today's uncomfortable question: how loudly is that clock ticking for the dollar? Start with a hard truth. Empires do not fall to a single arrow. They fall to a familiar sequence: overextension beyond the capacity to sustain, deficits becoming permanent, currency dilution, productivity hollowed out, social trust eroding, reserve status fading quietly. And then an ordinary day suddenly becomes the last day. The hook is simple. When confidence crosses a thin threshold, time compresses. From there's time to too late. Look at Rome. The denarius once meant real silver, real value. Soldiers were paid in metal that mattered. Merchants counted coins everyone understood. Then the frontier stretched. Legions needed pay. Roads, forts, granaries devoured the treasury. Instead of tax reform or contraction, power chose a shortcut that looked smart on parchment: dilute the silver. The emperor's face still shone on the coin, but the soul had changed. Prices crept and then sprinted. Shopkeepers refused coins. Soldiers demanded gold or grain. Tax collection stalled. The state struck more coins, but each new coin was hollower. Here is the next hook. An empire dies at the market stall before it dies on the battlefield. The final 3 days were just the curtain call. Shift to Britain. In the early 20th century, the sun did not set on the Union Jack. London set the world's prices. Sterling was the oxygen of global trade. 2 world wars consumed the century and the treasury. Gold flowed out. Debt ballooned. After the wars, Britain tried to turn back the clock as if nothing had happened, returning to pre-war gold parity. A beautiful speech, a brutal policy for factories. British goods turned expensive. Exports shrank. Interest rates stayed high to defend prestige. Unemployment tightened society like a wire. In the end, they still left gold, then devalued again. The rehook lives in the familiar feeling. When you defend a symbol against the cash flow, the symbol will strangle you. Empires rarely vanish overnight. They come apart in pieces. India gone. A canal lost. Power islands becoming memories. 20 years later, Britain remained, but the singular financial axis did not. Now the USSR. Half the world within reach. Missiles, space, tanks, satellites. Yet central planning bled productivity. The ruble lacked external trust. Internally, citizens stashed dollars when they could and chose goods over paper when they must. Cheap oil drained hard currency income. Grain had to be imported. Factories produced volume without quality. The cost of maintaining a sphere of influence exceeded means. The Berlin Wall's collapse was the picture. The real break was in the ledgers. Reserves thin, credibility gone. 900 days from signal to finish. No single shot. Just a system exhaling its last. 3 stories, 1 sequence. Why does it repeat? Because the math of empire doesn't change. You cannot spend more than you take in forever. You cannot print prosperity. You cannot persuade markets that a currency is unchanged when the structure behind it is different. You can argue philosophy. You cannot defeat a balance sheet. Here's another mirror. When you find yourself explaining too hard why everything is fine, everything probably isn't. Put the dollar on the table. It has been the bloodstream of trade and debt for nearly a century. The deepest capital markets. Relatively transparent rules. Immense economic and military scale. A network of pricing, contracts, and liabilities that orbits the dollar. There is no perfect successor today. The inertia is real. But the clock still ticks. Where is it loudest? First, spending and interest on debt. With rates no longer at the floor, interest costs have become a heavy budget line. When you borrow to pay interest, the story exits politics and enters mechanics. Brutal arithmetic demands an answer. If nominal growth does not outrun the cost of capital, the balance sheet loses rhythm. Second, the system's asset structure. A tightening cycle leaves an invisible cut. Long-duration bonds bought at low yields carry unrealized losses. When liquidity is tested, paper losses become actual losses. A few institutions slipping can cool confidence system-wide. Then capital demands higher yields. A self-reinforcing loop. Third, productive capacity and supply chains. Globalization cheapened prices for decades. But supply shocks showed that cheap isn't always cheap if you depend on a few choke points. As strategic links relocate, structural costs rise. Productivity is the only antidote, and that prescription needs time, discipline, and long-horizon investment. Fourth, reserve status. The dollar's share in global reserves is declining slowly, not collapsing. New payment rails appear. Bilateral deals multiply. Central banks buy gold more aggressively. This is not a coup. It's slow rain. The rehook. Things look motionless for a long time before they break fast. Fifth, psychology and politics. Money is confidence-coded. When a society fragments, the capacity to do hard things weakens. Fiscal repair, spending reform, productivity upgrades, none win applause today. Yet without them, you're negotiating with time. What then is the dollar's edge? U.S. capital markets are the deepest pool. Rule of law and relative transparency remain advantages. Dollar-denominated contracts root like vines across the world. And there is no comprehensive replacement right now. That does not mean invincible. It means the transition has huge inertia. History adds one note. These shifts follow an S-curve, long and flat, then suddenly steep. Consider three paths. Controlled descent. Fiscal discipline returns in steps. Debt growth slows. Inflation expectations anchor. Yields run higher for a generation, but the system adapts. Dollar dominance erodes slowly, yet remains the hub. Fast break via catalyst. A liquidity shock. A policy mistake. 1 week where large capital demands much higher yields. Borrowing costs spike. Temporary controls flick on. This is the new 900-day arc, no explosion. Just decisions crammed into days. Restructuring. A multi-core world of payments emerges. Currency baskets. Digital rails. The dollar stays large, but shares the stage. Surface looks smoother, thanks to tech, while underneath debts and assets are repriced. What should ordinary people do with a macro story this big? The answer lives in micro-discipline. Spread deposits across independent institutions and title accounts correctly to maximize protection under local rules. Separate operating cash from strategic cash. Keep 2 to 3 months of expenses in ultra-liquid accounts. Ladder short T-bills or high-quality government vehicles for the rest. For businesses, split your collecting bank from your payroll bank. Pre-approve secondary transfer rails and limits. Keep a simple indicator sheet like a weather map. Structural deficits, interest share of budget, current account, central bank gold buying, bond market depth under stress. When 3 or 4 lights turn red together, make small, immediate adjustments. Don't wait for loud headlines. Familiar rebuttals will appear. There is no alternative to the dollar. True today. But history says, no alternative often means not yet. Habits change at the edges before they show at the center. Inflation is down, perhaps cyclically. Structure depends on fiscal discipline and productivity. America is too big to fail. Scale buys time. Reform buys the future. Another rehook, if you're a household with too much debt, the question isn't how smart you are. It's whether you're disciplined enough to deleverage and raise durable income. Nations aren't different. Return to the clock. Rome shows a currency dies before the empire does. Britain shows past glory can't pay new bills. The USSR shows a superpower can switch off with a string of bad numbers. What about the dollar? The clock is ticking, but speed is our choice. Choose discipline. Choose productivity. Choose transparency with arithmetic. History doesn't force a rerun. It leaves watermarks. The next paragraph is ours to write. By now, you might want a prophecy. What you need more is a dashboard. 1 page with 7 indicators and a monthly cadence. No jargon, no illusions. If those indicators cool, carry on and invest in what you understand. If they glow red, interrogate your allocation and cash sources. No panic, just tightening bolts. If there's a picture worth keeping, it's this. Empires rarely fail for lack of heroes. They fail for lack of a CFO who says no. Financial history is a chain of small, consistent decisions more than one grand decision. Put the dollar into that chain, and the story becomes less mysterious and more actionable. If what you've heard made the clock in your head tick louder, don't mute it. Use it like an alarm for discipline, for productivity, for trust built with numbers, not slogans. And if you want the indicator sheet I mentioned, subscribe and turn on notifications. History doesn't need your panic. It needs your preparation. That's how a countdown clock becomes a wake-up clock.